Ladies and gentlemen, good day and welcome to the Navneet Education Limited Q4 FY24 earnings conference call hosted by Monarch Networth Capital. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Dani from Monarch Networth Capital. Thank you and over to you, sir.
Yeah, thank you, Muskan. Good afternoon, everyone. On behalf of Monarch Networth Capital, it's our pleasure to host the senior management of Navneet Education. We have with us Mr. Sunil Gala, Managing Director of the company, and other senior management, and SJ, the Investor Relation Partner. We will start the call with opening remarks from Sunil sir, and then we move to Q&A. Thank you, and over to you, sir.
Thank you, everyone, and good afternoon to all. And a very, very warm welcome to everyone present on the call. Today, along with me, I have Mr. Rumi Mistry, our head IR, and SGA, our investment relation advisors. Hope you all have received our investor presentation by now. For those who have not, you can view them on the stock exchanges and the company's website. So today, let me first begin with giving highlights of some of the recent news, the stake sale of investment made in Categorization Techno Services Private Limited. As you may know, our subsidiary Navneet Learning LLP, where Navneet Education Limited holds 93% stake, has entered into a definitive agreement with Venturi Partners, a PE fund from Singapore, to divest a small fraction, which is 5.12% stake of the company, which is valued at 225 odd crores. Over the years, Navneet Learning LLP has cumulatively invested around 118 crores in Categorization Techno Services, and this transaction marks the first partial exit in the company, taking Navneet's stake reduced to 14.92% now. This transaction aligns with our value creation strategy for our stakeholders, which we have envisaged while making investments in Categorization. These proceeds received from this transaction will enable Navneet to focus on core business objectives while unlocking shareholders' value. Secondly, in August 23, the Board of Directors had approved composite scheme of arrangement for amalgamation of two of our companies, one step-down subsidiary, GenNext Student Private Limited, and our subsidiary demerging of EdTech business of Navneet Future Tech Limited into Navneet. The scheme was aimed to rationalize the group structure and achieving better synergies within the two businesses, which is publication and technology business. Further, in the month of May, Navneet has received final order from NCLT regarding the merger proposal. In this regard, we have given merger effect dates in present accounts for FY24 and reinstated the comparative numbers for FY23 as well. With these two news, which I thought should be shared with our valued investors and shareholders, now let me talk about our performance throughout FY24. Despite challenging environment, what I mean challenging environment is in the education sector where we are. The company has managed to declare a stable performance. Our FY24 revenue experienced a meager growth of 3.5%, reaching to 1693 crores compared to 1636 crores in the same period last year. EBITDA of FY24 amounted to 299 crores with EBITDA margin of 17.6%, and our profit after tax was 189 crores. Now let me give you a little performance segment-wise. So first, I'll talk about our core business, which is publishing business. So in FY24, our publishing business displayed resilience despite encountering external obstacles like lower than projected channel inventory uptake, paper price increase, increased in resale of second-hand books attributed to no change in curriculum over past 6 years. Moreover, our strategy of integrating our EdTech business with our traditional publishing business and diversifying our products offerings beyond conventional learning is steadily advancing. This comprehensive approach is expected to boost demand in our publication sector in the coming years. So mind well, now what we are talking is a blended offering to the schools in particular. At present, we have for CBSE schools majorly, but slowly as we see, even SSE schools have started demanding some digital solution with the physical books. Now let me talk about stationery business. I'll start with domestic, which is all India. So in FY24, it grew by 7% to 407 crores. During Q4 FY24, we introduced designs created through AI technology, and the market response to these launches were quite satisfactory. Also, the company is exploring phased introduction of various products in non-paper stationery segment in the coming quarters. So what I'm trying to say here is technology is not restricted to the publication business, but with usage of technology in our stationery products also we saw very fruitful, and with that we are going to introduce more and more technology or use more and more technology while making these products. We are also committed to strengthening the foundation of our stationery business and are optimistic that the domestic stationery business will continue to gain momentum and grow in double digit. Now let me talk to you about stationery business exports. That business grew by 4%. This positive performance can be attributed to introduction of new products. However, the segment faced challenges due to the prolonged Red Sea crisis in last couple of months, which created obstacles for the smooth operations of our exports to various customers. Also, as you may recall, due to restriction imposed in the US market for some of our product categories, there was an opportunity loss of around 40 crore during FY24. This product actually contributes 8 to 10% of our export revenue. We have been taking appropriate steps ensuring a proactive approach to address the situation. However, this loss was the offset by the growth in our other existing products. Just to remind you, this loss, this being a seasonal business or back-to-school business, the business loss for a year is lost, which we could not again gain back during the year. But now that going forward in the coming years, we have taken appropriate steps. So looking ahead, we see a bright prospects about the business. We have plans to further expand our product offering to include both paper and non-paper stationery. So with this brief introduction of the business, now I open the floor for Q&A, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we will wait for the moment while the question queue assembles. The first question is from the line of Amit Khetan from Lurban Capital. Please go ahead.
Hi, good morning, good afternoon, and thank you for the opportunity. Galaji, could you just outline your outlook for growth for both the exports as well as the publishing segment, given that NEP is not going to be implemented from this year?
So in the current year, that is FY24-25, we are not looking at a major growth in publishing segment. Whatever new introduction of titles on our own that we have done, and also revision of certain titles that we have done particularly for the higher grades, that is 8th, 9th and 10th grade. We will see a little upward, but from our core business in Maharashtra and Gujarat, we are not likely to see much growth in 24-25. We will of course await for the decision from respective governments, and as soon as that comes, we'll start publishing for the subsequent years. So for this year, it will be a very nominal growth in publishing. As far as exports stationery is concerned, as I just explained over the call, that we had a loss of production, but this year we are very definitive of growing between 10 and 15% for sure. Of course, opportunities are much larger in terms of the order or the request from our customers, but finally it entails to various investments in terms of land, building and machinery, which also we have planned, but we may not see the fruits of that in the this year in 24-25, but we are building capacity for a better future.
Understood. And for Q4, if I look at the segmental data, because you have merged the EdTech business into the publishing segment,
yes.
What would have been the EBIT and the revenue for the publishing segment were this merger not to take place, just for Q4?
1 minute. Just for Q4, for the publishing, it would have been around 18 crore EBIT.
Got it. And revenues would have been similar, because I don't think the EdTech business is generating.
Yeah. Yes.
Okay. And lastly, can you just explain what's going on in SFA? Because I understand you took a markdown this quarter, and last year you had taken a markup, and these are accounting transactions, but just could you explain what is the basis and rationale for doing this?
No, so as for accounting standard, we are compelled to revalue the investment based on the revenue method that was adopted by us. And because the revenues did not, rather was little lower than the last year, the valuation came down, and therefore we had to mark down. So these are all notional gain or notional profit. But per se on SFA, I can say that the foundation of the business is very, very strong. They have been approached not only by the state and central government for various events, but now that they have they did around 9 SFA championship in 23-24, and that also has attracted many brand companies to look at the opportunity to either sponsor or give advertisement. So this year for 24-25, they have planned in 15 cities, and number of students are rising in every event. So between 20 to 30,000 students are participating in each event. So that at present, because there are no advertisement or sponsorship, the events are not making money, but the foundation or the IP that is being created in the company is very, very strong. So I can only say that company is on a right footing, and as we all would agree that the importance of sports in the country is increasing so well, and therefore the opportunity for an established or a stable company.
Understood. Thank you and all the best.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Aditi from Fluid Aura. Please go ahead.
Yeah, hi. Thank you for the opportunity. I have a couple of questions. So starting with export stationery. So you mentioned that we are expecting about 10 to 15% growth. So is that for export stationery or for stationery overall, like domestic and export?
That is, frankly, I spoke for both businesses that percentage. So you may consider stationery as a whole or individually also same percentage.
Okay. And on the K-12 sales, so in your presentation, so you mentioned that you'd be using these proceeds for in your core business, like you'll be putting that money in your core business. So any specific use case of that money, like what in publishing and export, or is it the capacity building that you were talking about a few minutes back?
So for last couple of quarters, I have been talking our major focus on stationery business. Publishing business is otherwise quite well set, but the opportunity in stationery business domestically or in exports are humongous. And not only with the product category that we are in, we need to add couple of more categories. So for all that, company will have to make reasonable investments continuously for next couple of years. And that is the way I said, that is the reason I said that the proceeds will be reinvested in the business.
Okay, and that is for FY25 or a couple of years going forward?
I wouldn't just cap it to FY25. Part of that will be invested in FY25 and balance subsequent years. So because suddenly increasing capacity without no sale also does not make sense. So it is a planned way we will do investment over a period of 2 to 3 years. And as what we understand, the opportunity in stationery will be far long than what we are talking of 2 3 years. So probably next couple of years continuously we'll have to make investments in stationery business.
Got it. So last question. So could you give me like the carrying cost of the stake that we had, like the 5.12% stake sale that has happened? So any gain, like if you could give me the gain, that would be great, or otherwise if you could provide me with the carrying cost of the stake.
So what I understand, you wanted the cost for the equity that we sold plus the interest till date, you mean to say?
Yeah, I mean you must have revalued that cost, right? So whenever any fundraise must have happened.
That's right.
So you must have revalued. So at what cost are you carrying, or were you carrying it before the stake sale happened?
No, so as far as pure accounting is concerned, again, whenever the revaluations were done, were all notional profits. But now, what I just mentioned in my speech, that overall for a 20-odd percentage stake that we are invested or we were invested, we had invested 118 crore. And the same value of that 118 crore would be around 850 crore, of which we sold more or less 1/4 of that, and for which we are getting 225 crore. So carrying cost of the balance cost would be, I have not seen the accounting effects of this, but around 60 to 65 odd crore would be the cost for the balance in equity that we are owning. So have I been able to
yes. I understood. Yes, got it. So thank you so much on that.
Yeah, thanks, Aditi.
Thank you. The next question is from the line of Arient from Bohat. Please go ahead.
Hello, Mr. Gala, this is Sonal Kohli. How are you?
Oh, hi, Sonal.
Just 2 questions. Firstly, on the stationery exports, you lost about 40 crores of business last year, as you mentioned. And considering your turnover is roughly 600 crores, a 6% addition in your export should simply happen because of that,
That's right.
So So when you are giving a guidance of 10 to 15%, are you including this 40 crores also?
Yes. We are including that 40 crore as well.
You're saying that organically, like to like, it's a growth of only 4 to 9% what you're expecting in stationery exports.
So, see, Sunal, the way you see that actually after losing 40 crore, then also we could overall grow around by 3% over last year, 3 or 4% over last year. So that around 50 odd crore we could increase because introduction of new products. And therefore I'm saying that with the base that we have, we would be at least be able to achieve between 10 to 15%, but you may recall that we would like to be a little conservative because things have not been in our favor last couple of quarters to our estimation. So I would then rather stick to that number right now.
Okay. And in terms of domestic stationery, what kind of aspiration do we have for growth in 25?
So percentage-wise, I did speak, but aspiration-wise, couple of them, we are adding various new products in the category that we are operating. We are adding more and more features, including the technology features that I just mentioned, to our present category. And in the current year, we are likely to introduce a couple of more category, non-paper stationery products as well, which we have already tried in exports. So 2 of them that we have already tried, and the same we are introducing in India as well. So in FY25 itself, we will see a couple of new categories being introduced. And but again, the first year of introduction, we really do not see big traction. But I think we will make a base for the future growth of the new categories as well.
Sir, what kind of, sorry if I missed this and I'm repeating this question, that you already said, what was the domestic stationery growth expected to have in terms of growth for 2025?
Yeah, again here we had mentioned between 12 and 15% for the domestic business growth.
And the kind of margin outlook based on current paper price, like would it be on the lines of 2024? Would it be higher? Would it be lower?
It will be around 100 basis point better than FY24 because part of the year last year we had to face the higher prices of paper, which is not the case. But with reduction in prices, of course, the end product prices had to be reduced because of the competition. But overall, as per our estimate, it will be around 100 basis point better than what we achieved.
And let's say the last 4-5 months, have you seen a major change in paper price or it's broadly same?
It is broadly same.
Last 4-5 months, no major change.
Yes, please. Yes, please.
Thank you so much. That's all.
Thanks, Sunal.
Thank you. The next question is from the line of Rishabh Shah from Bugle Rock PMS. Please go ahead.
Yeah, good afternoon, sir. Am I audible?
Yes, you are.
Yes, please.
So I have 2 questions. So it seems the business of Indianica has not done that well as much as the efforts we have given in FY24.
Yeah.
On a very small base, we have struggled to grow. So what changes or improvements we are thinking to bring in the Indianica business?
Yeah, so I agree to your point that Indianica, a small piece, we could not. Now, this is a totally different segment than what we have been doing over the last 6 decades, which is the textbook business for CBSE book market. Very different market. Here, the introduction of technology also has played a vital role on acceptance of products. Couple of schools have started creating their own content as well. And there is a bit of confusion among the school users that what all products to be used. Coupled with that, FY24, we did see a higher percentage of returns, which is normally a case in the industry. So it was beyond our expectations, some higher percentage of returns that we received. Now, I agree, we have spent around 7 odd years in this business, but the newer and newer experiences that we are getting, and because of that, the performance for FY24 is not the same as we could show in FY23. Having learnt all these things, now necessary steps have been taken. So apart from the logistics and the distribution controls, the couple of new titles also have been planned, and with that we are very, very hopeful that we'll be able to bring back that to normal.
Okay. And so my second question is, we sold our stake in K12. What was the logic for that, as we did not require that much cash? So why not let the compounding continue?
So of course it is definitely a great investment that we should have continued, or we will continue the balance portion. But somehow we felt that management, that since we want to go aggressively in stationery market, instead of just using companies' balance sheet money or raising debt, it is better that we use our own money by selling a stake. So that is the only logic that we had. Of course, in the balance, we are very sure that it is going to compound quite well, but we wanted to see the color of the money as well of the investment that we had done.
Okay. Thank you so much. Thank you.
Thank you. The next question is from the line of Dinesh Joshi from Prabhudas Lilladher Private Limited. Please go ahead.
Thanks for the opportunity. Sir, you mentioned that for FY25, you're not looking at any major growth in publishing, and you'll report some nominal number. But can you call out whether there will be any volume growth in FY25, given the fact that the syllabus change schedule is not out, or are we going to rely fully on pricing for growth in the publishing division?
So there is no question of price hike in the publishing, and the major reason is that paper prices have come down. In fact, what we have done in the recent year, what I just mentioned during my speech, that couple of publications for higher studies, 8th, 9th and 10th, we have revised them, where we have reduced the size of the product and have reduced the sale price of a product because cost went down. So that way there will be pressure on us to match the rupee term or value term business. But whatever that I said, that single digit growth we will have, what I have always been talking is the volume growth, not the value growth. But this year we have not increased product prices of any of our publications.
Sure, sir. And secondly, you also mentioned that post this K12 exit, you might invest in expanding your stationery business. So is it possible to give some guidance on CAPEX for FY25 and 26?
So FY25 as far as I will split that between two, land and building and the machinery. So as far as land and building is concerned, part of that advance money were already paid, which is shown in current asset, and which will get capitalized in the current year. So around 40 odd crore will be capitalized in the current year, for which payments have already been made in the previous years. But on building, we'll be investing around 30 odd crore in FY25 and around 60 odd crore in FY26. And in machineries, in FY25 we are likely to invest between 40 to 45 crore, and in FY26 it should be around 70 to 80 crore.
Got that. So one small clarification required. It might sound a bit repetitive, and it pertains to your ILL business. Now I understand the argument which you gave for a poor performance in FY24. But given the fact that NEP implementation for CBSE and ICSE is already underway, and I believe a few grades are already undergoing a syllabus change, despite that, we are seeing our performance not match up to FY23. So how should we look at it from FY25 perspective? And also if you can highlight some concrete reasons apart from that higher sales return which you mentioned, whereby we have not done well in the current financial year.
So first of all, with curriculum change, there is actually no impact to any textbook publisher. Because of curriculum change, they will never see volume growth. And why I'm saying this, that this textbook business is achieved through creating awareness in the school, getting orders from the school to be distributed through distributors. So irrespective of the curriculum, it all depends on the number of schools that recommends the product. So here there is no second-hand book concept in a textbook market, which is the case in our supplementary book business, where most of the larger portion of the products are sold through trade, where second-hand book concept is there. So as far as this business is concerned, there is no reason that the volume growth will happen because of the curriculum change. So I agree with you that couple of great curriculum, particularly 3 and 4 standard curriculum had changed, but because of that we did not see any volume growth. So majorly the other question that you asked, the specific or more, I need to be more specific, is apart from the sales return that we received, I briefly mentioned about the confusion at the school level, whether they want publications together with the technology offering or individually just the textbooks. So at Indianica in particular, we do not have technology solution today to be given to the schools, and that really gave us little setback, particularly schools who wanted to have technology as well. So that these are the two reasons: higher sales return, and couple of schools wanted a technology solution together with the textbook, which we did not have and which we could not give, and therefore we lost some business.
Sure. Sir, one last question from my side. Given that the demerger of EdTech business has already happened into Navneet, and this business was into losses, and you might have some past accumulated losses which you will now be able to set off. So can you call out what can be the tax rate for FY25 and what is the accumulated loss number that you have in the EdTech business?
So the appointed date for this Amal scheme was from 1/4/23. So once the order of NCLT received and the finally ROC compliances have been completed, we were allowed to take that benefit for the year FY23-24. So we have now in the merged accounts, we have already taken the earlier losses set off in FY24 only, and the benefit of that would be in the range of around 40 crore.
Sure, sir. Thank you so much.
Thanks.
Thank you. The next question is from the line of Tushar Sarda from Athena Investments. Please go ahead.
Thank you, sir, for the opportunity. I wanted to understand on the stationery business because you said that the opportunity is huge, and which we are also seeing in other players. But your growth targets are very modest, 10-15%. So is it due to capacity constraint? And if you put up additional capacity, how much turnover growth do we expect, in the years to come? I mean, what would be the ratio of turnover to the capex done?
Yeah, I agree to the opportunity available. The growth percentage that I mentioned would look lesser. First of all, Tusharbai, we need to realize that this is a back to school or a seasonal business. For us to grow in last quarter and first quarter of any year, we really need to have proper capacity. So all the growth is attributed majorly to the 2 quarters. So you're right that capacity constraint is one reason that we will not be able to grow better, more than what I just mentioned. And secondly, whenever we introduce new product or product categories, the benefit of that is achieved in the second and third year. Immediately we do not get benefit because finally the product or the category has to settle in the market. The acceptance from the users should start coming in. So for that we'll have to spend money on branding as well. So, and therefore I said for FY24-25 to grow beyond what I said may not be possible.
Okay, so FY26, 27 and 28, would you be more ambitious in terms of growth? Can you see
of course,
20%
yes.
plus? Can you see 20% plus?
Yeah, we are hopeful. We are hopeful of that percentage.
Okay. Thank you, sir.
Thank you. The next question is from the line of Gairaj from Visaria Group Office. Please go ahead.
Hello. Yeah, this is Giriraj Daga. So my first question is related to India Nika. Like any growth number or again growth guidance would you like to give? I understand what you explained about why we are not doing well in FY24, but any visibility on FY25?
So FY25, as far as revenues are concerned, we'll come back to FY23 numbers, that is for sure. And over and above that, we should be growing by around between 5 to 7%. These I'm all talking about volumes. Of course, I also mentioned that we have not increased the prices of our product in the current year. So overall, you may say that around 12 to 13% growth we should get in India Nika over current year.
Okay. Second, you mentioned about the capex number, 40 crore already paid, 30 and 60 crore for the land and building, and
yes,
about 130 crore. So cumulatively about 250 crore of investment. What is the asset turnover we should look on this capex? Like this 250 crore should be able to give how much of revenue? I'm not looking at let's say year 1 or year 2, but on a steady state basis, how much this should give a revenue number?
Three times of an investment you may consider, and only what I mean is 3 times of the machinery investment that we would be doing. As far as land building is concerned, of course we buy much larger land for at least keeping in mind 5 to 10 years focus, and therefore land will be there'll be no further investment in land. Only buildings and machinery will be invested, but you can safely count 3 times revenue generation over this investment.
Okay. Last bookkeeping question. When I look at the publication business number, a big number for this quarter particularly, there is a large swing. I understand it's primarily because of some restructuring effect also, because when I look at last quarter, March 23, you had reported 14 crore of positive bit, but this time it's 11 crore of negative bit. Is it due to some mark-to-market gain which has been shown in this number and this quarter it's not there and hence it's a profit number?
One reason, as you rightly said, is the loss on account of our EdTech business. I will need to come back on what is the other reason that would have come to make that, to bring that number down to 11 crore. I really do not have an answer immediately right now with me. And unfortunately, my CFO is not around today. Okay. So can we come back to you, Girirajji?
Sure. Thank you and all the best.
Thank you. The next question is from the line of Mohammed Patel from Care Portfolio Managers Private Limited. Please go ahead.
Hi, am I audible?
Yes.
Yes, please.
So for the non-paper stationery, are we planning to manufacture products in-house versus current outsourcing?
It will be mix of both. On a trial basis, we may outsource the products and start selling them. Depending on its success, we will plan manufacturing in-house. So it is mix of both, particularly where we have confirmation or confidence of getting orders, including for exports, then we will immediately start manufacturing ourselves. But for domestic, where we are not 100% sure of its success, we will outsource first and then manufacture.
Okay, so out of this 250 crore, there will be a mix of paper and non-paper.
That's right.
My next question is, what is the EdTech loss for Q4 versus last year? And also, if you can share what is this number for full year FY24 versus last year?
Yeah, I may give you rough numbers, but going forward, I really do not think we'll be able to give separate numbers. The reason is that now the technology is so much used for various other product categories of print publications now in stationery. So there's lots of usage of technology. The expense that we incur on technology activities is being used by various, but majorly it will be used by the publishing business. So, but net for FY24, we would have lost around 9.5 crore in the current quarter. In the last quarter, that is Q4 24.
And full year?
Full year loss was, including the both businesses, around 44 crore. And there 45 crore is because when we closed down certain activities, we had to pay many severances, and because of that, there was a higher cost.
So, will you be able to share this number for FY25-26? What is the plan?
No, I do not have any numbers right now, and frankly, it is so evolving. Activity is so evolving, so everything here may not be able to budget, but at least we are very sure that use of technology in the classroom, there is no alternate. There it will have to be. We will have to offer products which can be used in the classroom. So that efforts will continue irrespective of whether we are able to make money in near future. But we know because of our investments in that, it should benefit the publishing business for sure. And keeping that in mind, I won't be able to really give you any guidance on the investment or loss in EdTech business in particular. But generally, I can say that the numbers will reduce on two counts, because one, we have rationalized many activities. We are in the process of reducing sales teams, which were there for both book business and technology business. So we have started rationalizing there as well. The revenue is increasing. So overall, this number will go on reducing.
So you are saying we should expect a break even in the next 2 years?
In 2 years for sure. But again, I'm saying please do not try calculate EdTech business separately. It is not a separate business. It is one of the process for content business now.
Understood, sir. Fair enough. My next question is, so why the Indianica loss has increased from 0 to -10?
I already mentioned two reasons, that sales returns were higher in the current year than what we had expected. And the other reason was couple of schools, they wanted tech solution, the digital solution together with the publications, which Indianica unfortunately does not have today. And because of these two reasons, we did not achieve the expected sales and therefore the loss.
Okay. Why the domestic stationery growth was slow in Q4, which is a strong quarter given the exam season?
Now this, again, I will suggest all my dear investors or analysts, if you try comparing quarter on quarter for a seasonal business company, it will always, you will have questions. So my request would be to look at yearly basis, because here we are in the midst of season. At times, the trade or the school orders in the month of March, and at times they have ordered in the month of April. So it automatically then suddenly changes to the next quarter. So my request would be to consider seriously consider numbers yearly basis, please.
Okay. What will be the volume growth for the publication business for Q4 and full year FY24?
Again, I will not give number for Q4 in particular, but for FY, there was no volume growth in FY25. It would be around 2% lower volume, means we could sell lesser quantity in FY24 over FY23. So around 2% we had reduction in sales in volume.
Okay. And can you share the volume growth for stationery business, exports and domestic for full year?
I think we'll need to work that out because here there are so many complexities. Volume, it's not that the same product that we manufacture and sell every year. There is so much of revision takes place in each product category. So we'll have to really work out in terms of tonnage, how much tonnage we could sell in the current year. We may have to come back. If to me you can take Mr. Mohammad's number, we can go back to him with the volume numbers.
Sure.
Really appreciate. Thank you, sir.
Thank you. The next question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Sir, thank you for the opportunity. So I understand the current rejig of the business is going on, but just to understand, our stationery business in itself is almost doing 1,000 crore sales, and it's poised to grow around 12 to 15% next year. So have we ever, considered, from a point of view that if we demerge this business from creating a value for the shareholders, because we have peers who are doing almost, say, similar size of business and margins and are getting quite high valuation in the market. So just to understand it from your point of view, because from what I understand, it is the segment is self-sufficient as of now.
So I take your point and I understand what you're trying to say. So at present, there are no plans to demerge the two businesses. There are so many synergies internally, including raw material sourcing to distribution to marketing. And so that way we have frankly not thought on that. But we'll take your suggestion and discuss internally.
Okay, sir. Thank you for that. And sorry, sir, I missed on your earlier commentary when you gave what is the possible asset turn on the capex that we are doing for FY25 and 26.
So asset turn wise, I said that this year we will be investing around 40 to 45 crore in machinery for stationery business. And next year we are likely to invest between 70 to 80 crore in machinery. Whereas in land and building, we may have to add further 40 odd crore next year. So altogether, around 150 to 160 crore that we will be investing afresh, plus a couple of advances for land has been given, which will be capitalized in the current year. That will amount to around 40 odd crore. So altogether, 200 odd crore will go in this. And what I said was that on a full-fledged utilization basis, minimum 3 times asset can be turned over.
Okay. Got it. Thank you for the elaborate explanation and all the best, sir.
Thank you.
Thank you. The next question is from the line of Pradeep Rawat from Yogya Capital. Please go ahead.
Hi, good afternoon, sir, and thank you for the opportunity. So I am new to the business and I have one basic question. So, sir, for the stationery business, I just wanted to know what are the growth drivers for this segment and where do we see this segment in terms of top line and revenue contribution in, let's say, 5-7 years down the line?
So, overall aspiration levels in the country are going up for a branded products, and therefore the segment which was largely dominated by the unorganized sector is moving to organized sector. And therefore there itself is a big opportunity for the organized player, a branded company, to sell its products. So that's a clear-cut opportunity in India. Apart from the categories that we are in, we are likely to add a couple of more categories per se, and that will also further enhance our growth prospects in the country. So this is as far as domestic is concerned, and as far as exports are concerned, it is a clear-cut story, which is China plus one, where the present customers of ours, they want to increase their exposure from India. Now, having taken that decision, as far as the category is concerned, I think we are the largest exporter, preferred vendors for them, and therefore there itself is a big opportunity. So opportunity-wise, it is definitely clearly seen by the company. Now, it all depends how we execute the same. So that way, based on that, now we have planned certain investments as well as certain introduction of couple of more categories, and therefore we are quite bullish on the overall growth of the stationery, not only in FY24-25, but on a long-term basis. So to answer your question on what will be the revenue for, say, after 5 years, I think we should minimum double from here.
Yes, sir. So just to follow up. Yeah. So just to follow up on that, sir, what would be the market share of unorganized player in India? And so we export to like distributors into other countries, or we have our own brand over there?
We have neither of that. So we export to the end customer, that is the retailers of the developed country, that is majorly to the US. So we export directly to the retailers. We do not sell our branded product, neither we have a distributor there. So yeah, that was your one question, and what was the other question?
What is the market share of unorganized player right now?
Now coming to India, again, it all depends from category to category, but the major category that we are in, which is a paper-based stationery, as on date, around 22 to 23% is the market share of the organized players, and balance is with the unorganized players.
Okay, thank you. That was very helpful. Thank you, and all the best.
Thanks, Pradeep.
Thank you. The next question is from the line of Sonal Kohli from Bohat Investment Advisors. Please go ahead.
Thank you, sir, for this opportunity again. Sir, two questions I had. First one on your, school business investment. So when it's compounded, nicely over the years, and congratulations for making such a great investment. But, as you yourself mentioned in the past, few years, that it is not like a core thing to you. So, in response to, one of the investors, you said that you will continue to hold it. So you mean continue to hold it for next couple of years, or continue to hold it forever, my understanding based on...
For a couple of years, not forever, because I stick to that point that it is not related to our core business, but being investment is so good, and company really does not require that money very soon for its own growth. So I should say for a couple of years we may continue to hold the balance in equity.
And when, along with the main strategic holders, when they exit, you may also seek an exit at the same time.
That's right.
So that value unlocking will happen in the next few years. Got it.
Yeah, between next 2 to 3 years it should happen.
Understood, sir. That was my first question. On the technology losses, where you said, you club it, I could not actually understand one thing. So the run rate is still pretty high, 9.5, and by that logic, shall I assume that it will be more like, 30, 35 even in 2025? Or because of increase in revenues or further cost decreases, this number would normalize more?
So, Sonal, he asked me about Q4 number. Now, technically, the Q4 numbers are not great in terms of revenue, and therefore Q4 losses were higher. But come Q1 and Q2, where revenue will be better, so on a yearly basis, and as had mentioned earlier, I think we should, again, independently talking about tech business is now not right for me, but what will we be able to end up spending money? It should be around 25 odd crore for the year. But believe me, again, the facilities that we have is being used by publishing business the most, where we do not now will have billing or anything to the publishing company, because it is one company now, and couple of activities that will be used by the stationery business. All that will be added by advantage to the core businesses. So, but net purely on technology, that would be the number.
So, 9.5 is obviously not a recurring number to view, right? From a yearly perspective. And so in terms of the revenues, would you have a rough number? You've given ECLs separately, but rough level, just for this quarter, what would have been your total technology revenue comparable to Q3? Let's say Q3 was X, what was the number in Q4? So that at least for this year we can make a comparison.
1 minute. Unfortunately, I have it for the full year.
We can put it full year. We can calculate that from that. From there.
Yeah, full year it is 21.5 crore.
Okay.
Full year is 15 odd crore that we had earlier year.
21.5 crore.
That's right.
And you would expect some reasonable growth in this year, and to that extent your losses will further reduce. That's what you said in answer to this.
Yes, sir.
Okay. So I think earlier you were talking about the 30 crore kind of possibility. Would you stick to that in 25, roughly? 25, 30 crore? Very roughly.
For FY25 you are saying?
Yes.
Yeah, I can stick to that.
Great, sir. Thank you so much.
Yeah, thanks so much.
Thank you. Ladies and gentlemen, due to the time constraint, we will take this as a last question. I now hand the conference over to the management for closing comments. Over to you, sir.
Yeah, thank you, Monarch. And I take this opportunity to thank everyone for joining the call. I hope I've been able to answer most of the queries. If at all any queries further, you may connect our IR. And for any other information, you may get in touch also with our strategic growth advisor, our investor relation advisors. And thank you once again for all participating in the call. Thank you.
Thank you. On behalf of Monarch Network Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.